discuss more on the chemical sector, Mr. Ajay Joshi, the chemical industry expert, is joining us on the show. Ajay, hi, good to be speaking with you. Well, off late, there has been this increased talk around some of the anti-dumping duties coming in either from either against China, either Vietnam, etc. Are these something which can meaningfully help the Indian companies, and are there such more, requests from the industry pending for the ministry to look at?
Yes, good afternoon. I think we will see a lot more anti-dumping duties as well as a lot more minimum import support price initiatives that will be rendered from the Indian government to Indian chemical players. In the recent past, we are seeing that Deepak group of companies, whether it is Deepak Fertilizer or Deepak Nitrite, they have been gaining a lot of support from the government in terms of anti-dumping duties. Recently, the government has gone for anti-dumping duty on isopropyl alcohol also. So this is to basically safeguard the domestic players so that they do not lose out on domestic, that is Indian sales share against import from China, Middle East, Vietnam, Korea, and other cheaper countries. So definitely going forward, we will see more and more anti-dumping duties to support local Indian chemical companies. However, this will not safeguard Indian chemical companies in the export market, because in the export market it's an open arena. There they will have to compete with the Chinese, and that's why in the export market we will not see much benefits coming into picture. But for the domestic sales share for the companies operating in the domestic market, such initiatives definitely will be helpful.
So, other than this anti-dumping duty which has been implemented on IPA, which will benefit Deepak Fertilizer and Deepak Nitrite, which are those other chemicals where do you think that an anti-dumping duty should be initiated, and which companies will benefit out of that?
Apart from that, we have ongoing investigations and as well as implementation in the PVC and CPVC segment, where we have companies like DCM Shriram, Epigrill, DCW. Because for PVC, India has always been import dependent country, but lately we are seeing more and more investment coming into picture. In fact, Adani and Reliance are also going to participate in India's CPVC value chain and PVC value chain. So government is already putting up anti-dumping duties against Chinese and other Southeast Asian suppliers to build momentum in this space. Apart from that, we are also seeing epichlorohydrin and epoxy resin, which eventually go into paints and coating construction segment. Companies like Atul Industries company will be main beneficiaries from such initiatives. So going forward, as I said, we will see this across segment where we have two or more domestic manufacturers of the products which are sufficient to cater to the domestic demand.
So Ajay, for the last at least 1 year, we have been continuously hearing that there could be a recovery or there will be a recovery in the chemical prices and inventories would go down for these chemical companies, say from the second half of this financial year. But what are your checks suggesting on ground? Will it actually happen from the second half of financial year, or it might as well get delayed to the next financial year, that is FY26?
Okay. When it comes to domestic demand, that is India's demand, we already are seeing good demand, whether it is agrochemical, FMCG, flavor and fragrance segment. So companies like Dhanuka, Insecticide India, Bharat Rasayan, which are agrochemical companies that cater to predominantly Indian market only, will continue to do well, because in S2 second half now we will have Rabi sowing season, and based on the monsoon, the rains, the water reservoir level, we are expecting a good Rabi season. That will mean good demand for insecticide, herbicide, and fungicides in the local market. So agrochemical companies which are selling in the local market, whose majority of the revenue comes from the local market, will continue to do well. However, the global demand were on the recovery side in May, June month, but it got derailed because if we talk about China, China constitutes majority of global chemical demand as well as supplies, and there we are not seeing good turnaround now. For the past 2 months, we are also seeing China is importing less and less crude oil, which translates into lesser production of petrochemical, lesser production of chemicals, which signals that the domestic chemical demand has not picked up in China, which is a very bad sign. Because if there is no demand in China, the Chinese chemical companies are going to increase the price war in the export markets like Latin America, where they are kicking out companies like UPL. They are going to participate in the ASEAN market, Indonesian, Vietnam, Thailand market, where they are kicking out Indian companies like Clean Science, which supply antioxidant. They are not able to compete with the Chinese. So from the global perspective, the recovery definitely was in sight. but it has somehow got derailed, or rather, the recovery was already muted, but it got derailed further because the China domestic demand is so low. So now I'm expecting that next year, March, April onwards only, we can see some good turnaround.
Okay, so maybe next year, March, April is when you should expect a turnaround. But Ajay, there was this entire, battery chemical space that had got interest of a lot of investors. What's your take on that? What's been the, order inflows for some of these companies? Is it actually materializing into the revenues as well?
So right now we do not have domestic demand ecosystem of battery chemicals because there are no lithium-ion battery manufacturers as of now. However, next year, second half onwards, that is calendar year H2 2025, we will have Amara Raja, which would have commissioned its first ever battery plant. We would also have Exide and Tata. So then we would have the domestic sales outlet for the battery chemicals, and the fastest gainers in this segment would be Neogen Chemicals, because Neogen, as far as I'm hearing from the street, that they have secured forward supply contracts with some of these domestic battery manufacturers for the supplies of electrolytes as well as electrolyte additives. So in the battery chemicals space, next year, second half onwards, we will see some momentum.
Okay, Ajay, these were the questions that we had for you broadly. Thanks so much for making time and speaking with us. So that's the, entire sum and substance of the chemical sector. For some of the domestic-facing companies, it might be okay, but you need to watch out for the anti-dumping duties and the support coming in from the government. And for some of the stocks, recovery might have been pushed to the next year.